Hi guys, JJ here. We are now in February, and February generally is not a very trending month. It can be quite choppy, going nowhere for the whole entire month. So if you have any setup, please do not go aggressive. 0.5% risk or 0.75% risk, I think it's generally okay. But if you are not confident, then sit out. And if you are in a swing trade, if you give it 5 working days or a week, and then the trade is still not working out, and if you come back to your break-even price, you can always bail on the trade. Now, break even is still a win so long as you are not losing money. Or if you end up with a very small loss, let's say you risk $75, you end up with a $15 loss. I think that's okay for a trade that goes sideways lah. Okay. On the left side, you see that S&P 500, a solid January is a good sign for the rest of the year. This is by Carson. Got it from, I think, Trend Spider on IG. You can see that if January is return is more than 2%, the rest of the year return is generally a positive one lah. So we have got a 84% chance that it will be a positive year. Now, a positive year, if it ends up 3.1%, that is also positive. So please don't expect the market to fly and fly and fly. How will it perform? I really don't know. You see, 1965, January return was 3.3%. Rest of the year return was 5.6%, which means it made only like 2.3% for the rest of the year lah. Yeah. But what I want to bring your attention to is this CIBC chart. Can you see the SPX index, the SPY index? This is the average monthly return. Okay, for all the years, based on seasonality, we can see that February is generally a negative month. Negative, this is above is positive, below is negative, and so it's negative 52% of the time. And then you see that during election years is even more negative. To which, whether this might come true or not, I really don't know. But then we can see that, hey, probably in March, maybe a good trending month for us. In May, maybe a good trending downside for us. If we have a lot of swing shorts, we can do swing shorts. And then in July, in June, July, August, that will probably be one of the best months lah. I think I have shared one picture with you all before about election years and how the market usually performs, whereby the first quarter of the year it goes pretty much sideways, and then after that, May there's a dip before it rises. If I can find it, I'll put it in the group chat again lah. Okay. Now, before I go on to the chart, just take note that tomorrow at 8 a.m., Powell is speaking. So let's just change this time to GMT plus 8. So tomorrow morning, 8 a.m., Powell will be speaking. He doesn't usually speak at this time lah. So what is he going to say? I have no idea. Will he plunge the market? Maybe will it rally again? Maybe, I don't know. We'll just need to wait and see lah. Fear and greed is currently at 67, which is a good thing, which means that market either has already peaked previously, okay, or it is doing a small pullback to go up a little bit further. I will show you the charts in a while. And then based on seasonality, we can see that maybe the first half of February or the first 1.5 weeks of February, it's generally sideways, and then it might do a bit of a push before pulling back quite sharply. Whether this will come true or not, I don't know. It's just a guide. Okay. Now, back to the chart. There's something that I want to show you all. So, if we were to draw a trend line down here, okay, I think let's just draw it like that first. Okay, this trend line is relatively steep lah. Okay, this trend line is relatively steep, and if I were to clone it, okay, this one becomes, there is a bit of a buffer. There's a bit of a buffer. SPY might still push up a little bit, maybe for the next week to break out, and then that becomes quite overbought, and then it will start to pull back. Okay, I'll draw it for you. So SPY might still go, sideways for the next couple of days. I might break out down here, close above, and then go sideways before coming back down into this channel for the rest of February lah. Okay. If you were to see last year, what did SPY do? Where is it? Yep. So can you see that SPY, we had a channel down here, and then we just clone this. We just clone this. So can you see that SPY, the market broke out a bit to trap more people in, make people FOMO. Then after that, it comes back into this channel. And then after that, what do? This is a major up and a current down. We draw our trend line down here. If you were to wait, you wait until a long time later, then the alert ring lah. Okay. And so see that this part here, which is January 1st, this is March. Can you see that this part here starts to bleed quite significantly? If I were to just draw it out for you, take the measurement, SPY dropped about 4.9% in 13 days. And the first half of February is generally sideways. So I don't see much major crash or major pullback for the first 2 weeks of January, probably until after Valentine's Day lah. So Valentine's Day 14, 15, you all prepare to maybe TP more in your swing trades lah. Okay. Okay, let me just remove this first. So if I were to draw the Fibo extension for you, this is your swing low and your swing high and then your swing low. Can you see that we have actually completed the wave? We have actually completed this wave 3. This is your wave 1, your wave 2, and then wave 3. Okay, so then this is we have already completed the wave 3. We are currently overextended already. So will the market pull back? I don't know. It probably would lah. But then when does it pull back? Nobody has any idea, because the market will remain more irrational than we can remain more rational lah. Okay. But one thing that I would like to draw your attention to is, can you see the RSI, the purple color line below, the purple line from here to here? Okay, this is not a straight line. There is a bit of a divergence. Okay, there's a bit of a divergence. Can you see that this is making a higher high as well, but the RSI is making a lower high? That is called a bearish divergence. And can you see down here as well, the high to this high, we are making a higher high, but the RSI is making a lower high. So this is a bearish divergence. will it start to pull back and drop? No, I doubt so. I highly doubt so. But we may start to slowly see a corrective wave. What is a corrective wave? So you have got wave 1, 2, 3, 4, 5. A corrective wave, you can also call it like A, B, C, D, E. Okay, so what's a corrective wave down here? Can you see this part down here? We have a corrective wave 1, 2, 3, 4, 5. So this can be called a corrective wave as well. Now, so where does the corrective wave may start? I really don't know. We gotta wait and see for ourselves. But so long as where was that previous all-time high? So the previous all-time high was somewhere around here, which is the 47848, 478, there about. Like I said, market may come back down in the next couple of weeks to come back down here and bounce off. That will really be our confirmation to go long again. If market were to just pull back, let's just take this wave, this small little wave here, and then if we draw our Fibo extension, can you see that the 0.618 here, the 0.618 is somewhere near our all-time high. So if market pulls back until here and bounce off, I wouldn't be surprised. That will be our key to go long lah. Okay. So for next week, again, just watch out. Market may do. We have our trend line. If we have our trend line here, and if I were to just put it down here, right? Can you see that? Hey, actually the market this is a much more gentle trend line, I would say. Market has already break out, so this is considered overbought already. Yeah, if I were to just extend the trend line like that this is a much more gentle trend line as compared to the first one that I draw like that. So I will take the much more gentle trend line any day. Okay. So again, market may just go up a little bit, and then after that it starts to come back into this channel again, and then we will just see what it does lah. Yeah. Now looking at QQQ, so QQQ is very nicely. I've already drawn a channel down here. Can you see that? Down here it starts here, it came here, support, it came close to a support down here, and then now it's currently bouncing off. And QQQ is currently again at its all-time high. It's pretty much making all-time high every week lah. Now one thing that I would like to draw your attention to is those of you all in the WhatsApp group chat would have saw I did this. That this is the left shoulder, this is the head, this is the right shoulder, and that day when I was at reservice, I drew a line down here. So this is your inverse head and shoulder. Your inverse head and shoulder, the head to the neckline is usually the distance whereby it will break out to. Okay, so the distance from the head to the neckline will be the inverse of it. Is true. This is where the breakout will usually happen, which we are somewhere down here. Okay, now I remove this for you first. Can you see that we may possibly be doing another inverse head and shoulder pattern? So it may just jolly well come back down here to here, and then after that it breaks above again. Whether it does that or not, I really don't know. What I am more interested is that this is a major uptrend. I'm not trying to short anything. If you short, you die. So what I'm trying to do is I'm just going to wait for a current downtrend to form, and then after that I will draw my downtrend line and wait for the next breakout. Okay. So the earnings, we don't gamble on earnings, right? You see Apple earnings plunge, but like I posted back in the WhatsApp group, you see that hey, Apple is having a nice support. Okay, I draw from here, the nice support down here. Apple found its support again down here at this uptrend line. So what can Apple continue to do? Apple may continue to chop sideways down here, chop a bit, then after that maybe go up further, like what NVDA is doing, or like what NVDA did. So there was a very long consolidation for NVDA. Sorry, let me find that. So there was a very long consolidation for NVDA. Can you see that this part was the high, this part was the high, this part was the high, and then it found support down here, and then found another support down here. So isn't this a higher low reaching to the support, reaching to the resistance, sorry, and that is where we have the reducing interval for the breakout. Can you see that from this interval to this interval is what, 88 days? From this candle to this candle is 28 days. And then you see that from this candle to this candle is only 21 days. So that's a reducing interval to breakout. That is called a breakout sign lah. So this has been one of my best trades ever. I follow my Sufu's call on this lah. Okay. Looking a bit at the VIX. Again, the VIX has been going quite sideways. I don't know what it wants to do. But I'll just probably watch the 14.5 level down here, which is the previous resistance lah. So every time it touches this resistance, it always drop back down. Now that can you see this little trend line that I drew? Now that it has broken above, it looks like it is holding. So I'm gonna add an alert down here at 14.5. If the candle opens and close above for the day, then that probably signals that the pullback might be coming lah. Okay, so again, February may not be very trending. I'll show you again. So we go back to last year's February chart. Again, have your trend line ready, and then you can see that hey, we have actually broke out already, and then this is considered overbought, and market may come back in. So similarly, we have our trend line down here, and copy and paste. You can see that hey, market is starting to get overbought. It might push up a little bit more, and then after that it will start to come back in lah. So for February, stay safe, go smaller size, protect your profits. If you have made like 10-15% in November, December, or even January itself, you have already made 10-15%. February is really not the time to go aggressive. I learned a very big lesson last year from my February trading lah. So either sit out or go smaller size or accumulate for position trade. But accumulation for position trade will not be so fast. Okay. So if you want to accumulate for position trade, I will see that it has pulled back quite a bit, quite a significant amount. Maybe when it touches the previous all-time high, which is this level. So maybe when it touches this level, then I will start to accumulate for the position trade. So that is where, maybe it might have done a corrective A, B, C, D, E wave, and then it reaches down here, then it might start to U-turn. And then we go again, check the seasonality on what is the on which month, now we can see that, hey, March generally is a very good month. So we might start to accumulate for the March rally. Okay, so please don't go aggressive. Sit out if not confident. Good luck.